Check. All right, vocals look good. Let's get started here. All right, good evening, everyone. Glad to see you here. If you're watching this after the fact, don't worry. Apologies, I couldn't get on earlier, but we are here today. We'll try to make it quick, so it's a quick and dirty one, okay? So, a couple of things that we want to look at this week. And the obvious one is on Wednesday, we've got a really key event. So let's flip over to charts and see what we've got. So this week, we've got FOMC statements, rate announcements on Wednesday, March 20th. So everything that sets up on Monday and Tuesday. If you are not done by about 8 or 9 a.m., you're going to have a difficult time trading in the morning of FOMC. I would wait until, let's see if FOMC gives us a two-stage movement. It doesn't always, but sometimes and more often than not, it does give us a two-stage delivery. So we're going to be watching out on Wednesday for that. That's going to be a key area that I will be trading, hopefully, if I don't have too many meetings. And then, of course, Thursday, we've got flash PMI and unemployment claims Friday in the morning, followed by Friday, Jay Powell speaking. I do not want to be trading during this time on Friday. Friday is one of those days that I just will likely just observe or risk very, 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 very far down. So do what you want this week, but I would say once we get past Wednesday and Thursday, be very weary of trading during Powell speaking, because algos pick up on what Powell says and jack the market accordingly. So keep your eyes out for that. So great. So now that we have that handled, let's take a look over at the charts. So let's go over here and let's bring over a weekly chart. All right. So let's go back to full screen here. So this is a weekly chart. We see that we have this old monthly high. This is what I want to pay attention to, as well as this weekly short-term low down here. So it happens to be an important low to me. I think I'm going to remove these. These were from a previous video that I just filmed regarding how to backtest. So if you haven't seen that video, feel free to watch that one. I think it's a really great one and something that's valuable. So check it out. But if not, we will take a look at this anyways. So as you can kind of see, once we broke above that previous all-time high, we traded down to it, never closed below it yet. And even so, we traded above here. We traded back down into this down close candle, and we did close through 50% of it. So the question here is, will we continue this week? Will we head up into the, we're above the close and the low of this already. So do we come up to the midpoint, mean threshold of this down close candle, and then head lower? Do we head to the previous new week opening gap? In fact, I need to mark this week's new week opening gap. So let me go ahead and do that so you can see that on this chart. Let's see. It's roughly around here. So let me zoom in a bit and get that exactly correct for you on a different chart here. So we have a close of 18,064, exact number. And let's say this open is at 18,072.75, exact number. Great. So we have our new week opening gap here. You can kind of see that. We'll see it easier on a different chart, but for the time being, this weekly chart, you can kind of see how we've still gone up, down, up, down. So this whole month of March, we expected consolidation and we're still getting it. So there's no question about it. This next week, is going to be key. If we get movement down here, we could still come back up here. So we're in an area where typically consolidation is happening. On the higher time frame charts, it could look like some movement, but we are still within this range right now. And this dealing range is what we're looking at. So from this low here to this high, we have reached below and closed below the 50% mark so far. So we're past the equilibrium point. So it is more beneficial for buys if we have a bullish bias. So the key question here this week is, do our big boys like commercials decide that, hey, we are going to go short or we are going to go long? Well, that's a tough question to say. At the end of the day, we aren't nearly quite at as high of a short level that we've been in previous times, but it still does look like from an annual basis we do see some short interest there as a hedge. So we're going to keep a close eye on the commercials to see what they're going to do. But if we start to see major displacement down, I would like to see if we close below this weekly short-term low. If we do, I mean, alternatively this week, if we just never close below this low and expand higher, that would be really interesting to me as well. But I think we'll probably end up expanding lower down into that daily. Remember last week we had mentioned this daily fair value gap and the consequent encroachment of it right here. We traded down to that immediately, down to that, and then headed back upwards, closing the week with a TGIF trade. So Geronimo, hey, long time no see. I'm doing well. How about you? How are you doing? What have you been up to? How's trading going for you? Hopefully it's going well. We're trying to do a quick little review today because I know it's a little bit late, but we're focusing on the salient things. So we are holding, the whole market's holding their breath to see whether or not we see true displacement and big candle close on the weekly chart. So we had a big weekly candle displaced lower than this short-term low, this short-term low, and this short-term low. All of these consisting of a big liquidity pool here. The question here is now, yes, we closed right beneath it, but do we end up popping back up here? So this could be the start of a reversal. We are in the month of March. It would have been roughly, oh gosh, since January, right? January, February, March, and even December. I mean, goodness, even like the beginning of November was really when we started this whole move, right? So November, month of November, December, January, and February, right? So if the month of March thus begins our trek downwards, or maybe we consolidate, we need to look for evidence first, because I do not want to be trying to pick the top here, right? So while I will take a short, evidenced by Friday's trade, that was a nice solid 142 handles. I'm still waiting for the higher time frame to tell me on the weekly that, hey, we're breaking through short-term lows and closing. We're heading lower, right? So that's what I'm waiting for. If you take the daily chart, there's a good chance that as long as you look for really big displacement, I think you'll have no problem waiting for the big displacement on the daily chart as well. You can kind of see how this might have tripped some people out here. Lots of people might have tried to go short here again, but what they missed is that the lower lows, they still haven't created truly lower lows on the higher time frame charts. So on the weekly chart, it did not look like we were going to create any intermediate term lows that were lower. We've still been creating higher highs and higher lows. So I'm waiting for a market structure shift. I'm paying close attention to this monthly red line here. So that's roughly around 17,950. And of course, 17620.75 is going to be a key low for me. If we break below those for some reason and close, that's going to be enough for me to look for movement back up into a sell side, kind of like a SIBI, and use that to head even lower. FOMC is going to be key. If I see that we've kind of ranged here, or maybe created some other lower highs here, maybe we create some slightly higher lows, but not lower than this one. Whatever direction FOMC is taking first, I will look to take the other direction in the 30 to 45 minutes following that session on Wednesday. So that's the biggest trade that we're looking for this week. If you don't trade any other day, look for Wednesday. And if you haven't traded FOMC, just observe it. Don't try to don't try and be a cowboy, get all your accounts passed. You can get accounts passed on that type of volatility. In fact, I have done that before as well. And I think that it's very possible, but it is very difficult. If you're new to trading FOMC, don't do it, just observe it. Or if you're going to do it on demo and try to use the same kind of, just observe it. If it moves too fast for you, just observe it, So, okay, so now what am I thinking this week? Well, same thing as I put in the community notes. I am thinking that 1, I'm going to watch those key levels, but 2, we're still in a higher time frame consolidation area, so we need to keep our eyes on the lookout for major displacement in one way or the other. Otherwise, we could just continue consolidating for the month of March. And what does that mean? That means on the daily chart, when you see something like this, up, down, up, down, up, down, up, down, up, down, up, down, in a range, that's typically what you see in March, right? So once we get to April is generally a bullish month. So if we remain above this monthly level here, there's a good chance that shorts are going to continue to get squeezed and we're going to continue making higher highs. This high here is quite suspect to me, but we are also at all-time highs. So we're bound to be able to take it lower before we head higher too. It is an election year. I have that in mind. So things can work a little bit differently as we begin to create all-time highs. But with all-time highs, we must have all-time lows too at some point, or at least session lows. So lots of things that could drive us to either side. We are in consolidation. We took out a lot of sell side liquidity here. And this is external range liquidity plus an internal range liquidity on this dealing range, right? So if we take a look at this, on the daily chart, we can kind of see how we've come down into a optimal trade entry for longs. Now, this would be true if we were in a discount, but we are in a heavy premium. So I'm not treating the longs quite nearly as much as I'm not giving them as much respect as I usually would if we were maybe a long time ago, if we were like down here, maybe. So this is a heavy discount from this dealing range. So now we're in this overall dealing range, hugely premium. So I think that we're going to start to make our ways down soon. If not, if we don't, then and the market continues to squeeze, well, we could continue a bullish run until the end of April. And I would look to see right as we end April, I would look to see if at this time we break below our short-term lows that we create, and for the month of May, we head bearish. And if we don't, if we just keep on running, then the rest of this year until, let's say, maybe like September or so, there's a good chance we're going to run during this election year if we miss that. So yeah, overall consolidation is still expected. I am very curious to see what will happen as this first day starts to build out. We saw a really nice price action yesterday on Friday. Right now, we're seeing that we haven't really broken below the new week opening gap. So we haven't really created anything more than a institutional order flow entry drill underneath that new week opening gap here. So we're going to take a closer look at that right now, right? So this is our opening price, right? This is our opening price here. We traded down to the new week opening gap, down to new week opening gap. It's been kind of protected here. So time will tell if we end up seeing anything further, but we have a low, high, lower, low as well. So if we start to see some really big candles above this point here, well, we can expect for price to maybe trade back down to that and then head higher. Now, do we have enough details in order to specify that? Well, let's see what is dollar doing. So right now on the dollar monthly chart, we see it's kind of, we had this big displacement on the way back up, this big displacement on the way back up into an internal range liquidity, and we've started to see us head lower here. We haven't seen quite displacement lower completely yet, because this is our short-term low that we created here. And if we see us head lower here, then that will signify that, hey, we're ready to break away from this range and head lower. Now, I really don't know if this movement lower was just to head further lower, or if it's the peak, or if that's not yet the peak and we're waiting to take out these highs up here on the dollar. That's a really difficult question. Right now you can kind of see this constricting here, dollars constricting. Yes, we did break down from a previous bearish order block on the weekly chart, monthly inversion fair value gap, but we kind of held at this point as well. So if I go back to the monthly chart, you can see how we've got this premium inversion fair value gap, which we sold off from, and then for the month of March we are heading lower for the time being, and we bounced off of a previous monthly low as well. So not quite sure exactly where dollar wants to go yet. It's very possible that the dollar could be simply consolidating right here. So maybe it's accumulation, right? So here's the first part of a market maker buy model hits its low point. We see displacement higher, consolidates, displacement higher, consolidates, and then maybe we see a run for relative equal highs up here. That's what I would be curious in the coming months. I'm curious if we end up running for these relative equal highs up here. So we would have gone, taken out external range liquidity here. We went and started to reverse displacement higher, comes back down into internal range liquidity here, takes out external range liquidity, reaches for a different dealing ranges, internal range liquidity as a PD array. So I think that if this plays out with a market maker model and heads higher, there's a lot of room for us to head lower, especially if dollar starts to really spike. Now, we do have 3 expected rate decreases this year. If Powell and them say, hey, inflation's transitory, I think we've got inflation down to as low as we can, they're going to start to lower rates. Now, if that happens, inflation might start coming up again. As they start to lower rates, it's going to be tricky if they see inflation start to rise again. Now, it's going to be bad for everyone overall, but we'll see this tackle this relative equal high here, if that's the case this year. So from a monthly perspective, long-term perspective, I kind of see, let me see if I can make this wider here. So I really do see us getting into some trouble for equities if we end up seeing dollar rise to this level. So we'll see what happens here. All through this printing, we saw this movement higher in dollar. And then, of course, October, November, December, January, through this part of 2022, 2023. this January of 2023, look at what happened on dollar each month. Just straight up ugly consolidation this whole time. So we'll have to see if this movement into this internal range liquidity on the higher time frame here, we'll have to see if dollar moves, if this was the peak and now we're starting first stage distribution. Oops. If we're starting first stage distribution and then we see a spike drop second stage distribution straight down to take out these relative equal lows down here. So if that happens, then we're going to see stocks and equities skyrocket, nice blow off top here, and then maybe it comes down and starts its trek back up to take out this eventually. So that's what I'm thinking is happening on the longer term perspective. So I'm keeping my eye out for dollar to see if we do end up seeing second stage displacement as a part of a market maker sell model. So that's what I'm looking for on the dollar, and that would help us continue higher, continuing to squeeze out shorts, right? So I don't know if this is going to happen, but that's what I'm looking for. We'll see if it actually occurs. Typically, the beginning of a week, if we start to head up on Monday, then we might see something like we head up on Monday, we create a relative equal high around here, and then come back down to new week opening gap on Tuesday. And then Wednesday, we kind of see a movement and we stay around this new week opening gap until the 2 o'clock p.m., 2:30 p.m. FOMC statement. And then from here, I'll know what direction the week wants to take. My theory is that we will head higher, but I've been wrong before, right? So we want to watch and see what forms past Wednesday, because Wednesday is going to be the key there. It's going to tell us what direction it's going to go. So try to be patient this week. We took out a huge liquidity pool. It's not done yet. There's still some more to go. If we're going to be bullish, though, it's probably going to leave this open here. But if we are not, then we're probably going to aim for that. And maybe we'll create a little consolidation zone here as another consolidation area before we take out this easy low liquidity resistance run beneath us. So yeah, let me show it to you on the hourly chart. So this whole area, if we are to head higher before we head lower, kind of like similar how we did in the previous week, we kind of started lower, went higher, Monday, Tuesday, Wednesday high of week, Thursday sell off, Friday sell off, bouncing off of the new week opening gap and heading lower. So if this week occurs, if this continues, this sell side market maker sell model, then we are destined to aim for this key low. Whether or not we head all the way down there and below, that's going to tell me if we have truly seen a shift into the state of delivery. So that's it for today's discussion. We'll monitor Monday, see how it goes, and then we'll trade on Wednesday as well. So hopefully that was helpful. Hopefully that was some sort of helpful. And hopefully you got something out of that. But that's what I'll be looking for. So that's it. All right, so it's a little bit late now, so I'm going to go ahead and close the stream. But if there's any questions, just drop them in the comments. I'll observe them and get back to you as soon as I can. So thank you very much for listening in, the three of you who are here watching. And yeah, let me know if you have any questions, and we'll watch this week, watch Wednesday. It's going to be really fun to watch. And I love FOMC weeks. A lot of people hate it, but I think it's really fantastic price action and very predictable at times. So with that, have a good night, stay hydrated, and we'll catch up soon, okay? So I'm going to be online on Wednesday morning and Friday morning. I just don't have enough time Monday, Tuesday, Thursdays to get my week going and do good by my clients. So I'm not going to stream Monday, Tuesday, Thursday, but I will be streaming on Wednesday and Friday. So you can look forward to that. And I think that Apex is still running their 80% off pass in one day type promotion. You don't have to buy, like, don't, again, like, I do tell this to everybody, don't buy these if you're not ready, but the 80% off is, and the 1 day to pass is going to let people fail really quickly when they get to their PAs. Even if you get it on accident or by sheer luck, you can fail these really easily if you use the same amount of risk. So be careful there. The 80% off evaluation is still there. The code, of course, if you scroll down, my code is DBVIBOHK. I will be probably buying maybe 1 or 2 of the 150K accounts, just because I started to stack up a few of those, and so I'll probably start to keep using those instead. As I do have some 50Ks as well, so I'll continue to build on the PAs this week, and we'll see if we can catch another big run. So I realized I wasn't sharing my screen at all, but that's okay. Yeah. All right, so have a great evening. We'll catch up soon. Take care, everybody.